Right, guys, welcome. Emma, Ryan, Hunter, once again. And Tuesday stream used to be the spaces, but now we're expanding everywhere, guys. You can watch us on Kick. You can watch us on, I'm doing a little thing on TikTok here too. Our Instagram might be working, but all the platforms here, X as well. Guys, you can type and see your name in the chat there on the side as well. If you guys got questions throughout the session, you can ask them there. Emma's going to be keeping track. She's going to be popping up some every once in a while. We might want to do them throughout the meeting if we're kind of if the topic is on board with what we're currently talking about. So Emma, you can step in at any time and ask a question if it is relevant to what we're talking about, guys. 30-minute, 45-minute session, quick one. Let's dive into it. And today we're talking about the difference between brokers and prop firms, guys. So a new meta is coming where prop firms are taking over. Now, we see that very apparent in the fact that brokers are kind of abandoning their brokerage project and moving over to the prop world side of things. So let's start off, obviously, with the market breakdown as we normally do here, guys. We got the chat box there. I wonder if I can move that around so that you guys can see the charts better. But that doesn't look like it's too far in the way, hey? Okay. Right. Hey, guys. Good morning. Good morning. Good morning. Everyone's asking for a giveaway. Okay. Lovely to see y'all chat. Okay. So as always, we give you the best breakdowns for Bitcoin here in all of this, all of online space, all of the YouTube space. There isn't anybody who's better than Maven at predicting Bitcoin here. So markets on the monthly, we've been looking for this level to close there. We have another week or so, week and a half, 10 days until that needs to close. It looks really, really strong for the monthly close. If we don't close above it, I'm a little bit more bearish, but it looks great. In terms of the weekly, we did suggest you buy up this level. It bounced right off of that level. Exactly. Guys, if you're looking at the daily, you can see where that level coincided because that was the untested FVG, right? How are we guys doing? We're doing well. Thank you, Mohammed. Yeah. Good morning. Okay. So that's the level on the weekly, and then we're buying it back up. The weekly level a couple weeks back, this was a really significant point for us. We actually only needed to close above that level there, which we did bounce off of again. And it's super, super bullish, right? You see that candle get completely bought up. Now, the logic behind that is that we attempted to make a new low on the downside, right? And the bulls said, no, we don't want to do that. So the bears lost their power. So the weekly actually, when printed in history, we can see very clearly that they weren't able to make that new push to the downside, right? So when you're looking at the daily or the 4 hour, it's really choppy and messy. And you think, okay, that's going down, right? That looks like a chart that's going down. But the reality is because of the weekly candle, it's actually going up. So you want to look at the higher time frame, guys. The month is going to be a really, really key point for us. So once that does close, S&P looking strong once again, very similar style, right? Let's look at the monthly on the S&P. Exactly what I mean, right? The monthly candle bought up after bouncing off that level that we told you once again to buy off of that level, okay? Weekly though, right? It does look a little bit weird, right? You're probably going to see a rejection off that level, come back down, and then back to the upside. So this is what we're probably going to see, something along those lines, and then continue to new highs. NASDAQ, a little bit weaker. Let's look at the monthly. Again though, right? If you're looking at the higher time frames, the month is the key indication of what you want to be looking at. We bought that level there, failed to make a new low, obviously, right? And continue to the upside, right? Look at gold. Gold, I don't care for, but a lot of people love gold, right? Gold always climbing a little bit slowly over time. Not my particular investment. Guys, that's all for the market analysis. We don't do anything other than Bitcoin in the traditional market, Forex or anything like that. Right, let's close that out and start talking about prop firms and how brokerages are panicking. They're sitting in their seats and they don't know what to do here. We've seen a couple brokers actually start integrating into the prop firm space. And now the issue that they're going to have is largely they don't have the data. And there's been a couple of situations where there's been a couple data problems where they don't know their pricing or anything like this. And we've seen, I believe Oanda and Blueberry have now entered the prop firm space. We also have FX Pig, which they did FXify, and there might be a couple others that I'm forgetting. But these guys are all entering the space and they're putting all of their focus and new revenue into that space. And they're trying to come back into it. Now, the wave of prop firms is obvious, right? That this is going to be taking over, right? Because why? In new developments of any market, we want to make it easier for people to get into the space, okay? And that's apparent with all forms of technology, right? It's more user accessible, right? We have gone from the telephone to the cell phone. We've gone to apps, everything that's more and more user accessible, right? And the same is happening with this space here. We went from trading on trading floors to brokerages, to those brokerages then implementing micro lots, right? And so you didn't have to trade a full lot anymore. You didn't need hundreds of thousands of dollars, and you started adding leverage so that you can trade with even less. And now the new age, guys, there's probably going to be something even after prop firms. The new age is prop firms, right? Why is it faster? Well, you pay with a credit card, okay? You pay with a credit card and you're instantly trading within 5 minutes, right? Go into the broker space. Okay. You have to apply for the brokerage. Next day, they'll set you up. All right. Now you have to deposit funds. Okay. Go to the bank. Oh, shit. The bank's closed. Okay. I'll go back tomorrow. Okay. Dang. Okay. Go back tomorrow. Send a wire. Wait 3 days. Oh, wire was lost. Okay. I have to wait a month now until the wire gets found. Right. I see Ryan laughing there because the endless amount of times where the wire gets lost every time. Luckily, you always get it back. But anyways, guys, I digress. Okay, so credit card payments, obviously very, very easy. Crypto payments, very, very easy. This is the new meta, okay? The issues, though, okay? Obviously, there's new issues with every single emerging market, and that is the volatility of the market. And we're seeing a lot like the crypto space where something new technology comes in, right? A bunch of companies come out. They say, hey, I want to be a part of this. Wow, there's a lot of money in this. There's a lot of hype in this. There's a lot of attention. Everyone's going nuts. Okay, I'm going to start a business. And then they don't know what the hell they're doing. Okay? A lot of firms have been going under. Maven's been not. It's been one of the I wouldn't say lucky, but one of the very well dedicated firms. Right? We have a team of directors, and two of them are sitting here today, Emma and Ryan. Guys, Ryan, I'll start off with you. How do you see the prop firm space taking over the brokerage space? Let's just kind of expand on what I've been talking about. If you have anything to add here.
Yeah, I mean, I think that your example of emerging markets is interesting. I'd go all the way back when the first emerging market investment theme came out. It was the BRIC nations. For those aren't familiar with that, it's Brazil, Russia, India, China, and basically anyone could put money into those and make money. It was just going crazy. That's how it was 2 years ago in the prop firm space, right? Like anyone could just come in. There was all kinds of firms offering all kinds of crazy, easy conditions, mediocre conditions, whatever. It was people that didn't really understand the business or how to run a business. And so over time, we've seen a weed out happening, which is ultimately, I think, very healthy for the space. But I definitely consider the prop firm space an emerging type market. I think it's relatively still in its infancy stage, and there's just a massive amount of potential going forward. But that's how I would kind of say the layout of the land is right now with it.
Right. Yeah. Sure. So the differences then between the prop firm and the brokerage, a lot of differences in terms of what you're allowed to do, right? Brokerages might limit you to certain leverage, where prop firms, they give you a little bit more freedom to trade with higher leverage, but the same sort of thing can be said about rule restrictions. Ryan, you want to break down maybe some of the differences in terms of what you're allowed to do in each, where
Yeah. I mean, even some countries have laws against leverage and things like that, where brokers are only allowed to use a certain leverage. So it's I think of it like this. I mean, prop firms are a platform that's designed to learn the trade, master your craft, and ultimately graduate to be doing this with live funds, right? That's what the definition of what a prop firm was created for people. Mm-hmm. However, now we're seeing a situation or an atmosphere, an environment, landscape, whatever you want to call it. We're seeing it where people are like, well, why do I want to, get to that point and then only trade live funds? Why wouldn't I look at prop firms as like a piece of what I'm doing always? Because the reality is that if you're a great trader and you have, $350 or, $379, you can go trade that $379, right? You can leverage it some, whatever. You make 5%. It's based on that 379. If you take that same 379, you go buy $100,000 challenge valuation account and you pass it, you pass both stages. Then all of a sudden you have the potential to apply leverage to $100,000. And these are, of course, are simulated funds, but you're making difference on, you're making money on the difference. And that's a whole different powerful thing. There's no way that you can attain that level of capital and leverage that quickly in a brokerage account, unless you're just, I just have money, you're born with money, whatever. So it gives people the opportunity to potentially make money or trade volume that they would not normally have access to be able to do. And because of that, you have a potential to have like a life-changing scenario. And the smart thing to do to leverage a prop firm going forward is to always have money in prop firms, but also peel your winnings out and do other things with them. Live accounts, other businesses, dollar cost average into the S&P 500. There's all kinds of things that you can do. But my point being that prop firms initially were kind of like a stepping stone that everyone viewed as to getting to your own live account. Now I think people are starting to view them as part of the overall piece of everybody's strategy. Everybody should have an allocation to prop firms.
Yeah, I totally agree with you there. My preferred method in terms of money management here, just FYI, Emma's just rejoining. There's no issue there. She's just, there we go. We'll get her back on stream. Perfect.
She didn't like what I said. She just dropped off.
Yeah, she just dumped off once we started talking about some serious stuff here.
Yeah, I just got sick of you. Sorry.
Yeah, not a topic for you. Hey, we'll include you in a second here. So my preferred method is, if you're sitting with $100,000, right? Let's say you do have $100,000, right? Mm-hmm. And we're not talking about somebody who's just starting out. Well, what are you going to do with that $100,000? You're going to leave it in a brokerage and just trade with it and trade 10% of it? Like, it doesn't make sense. You're only going to risk like your $90,000 is wasted, right? Because you can only use so much of that margin, right? And you're not going to want to go deeper into drawdown than less than $90,000, right? It's 10% of your drawdown, right? So you can then use that 10K to start buying prop firm challenges, put that 90,000 somewhere else, right? And like you said, like a business, I was just thinking crypto, right? But totally, you could invest in a business with that 90,000. You start another business to do on the side while you're trading, because the reality is trading is very much boring. It's really boring, guys. Like, everyone's thinking flashy lights. I know, Emma, you're sitting here, you see us trading, you're like, holy crap, this is exciting when we sit there and make one decision per day, right? It's really flashy world. Now, Emma, what would be your preferred method? Do you agree with us here, or do you think prop firm or brokerage?
I have a little less to say on the matter because I have less experience kind of on the technical side of trading.
Being a newer person emerging into the market, pretend like you're new into the space. That's what I'm asking.
Yeah, I think, brokerages get very hyped up. And because they get very hyped up, people fail to recognize sometimes there can be issues with brokerages too. I choose prop firm simply because, I work with a prop firm and I know we're good. But
I have a comment too, real quick, on the other way to look at that, the usage of prop firms versus brokerage or both, and reinvesting. Think about that, you guys, in terms of like risk management for your overall. If you're able to accumulate $100,000 and you can get the same bang for your buck only trading $10,000 of it, for instance, meaning allocated through different prop firms, whatnot, and you can keep another 40 in businesses or crypto, and then 50,000 you can keep safe. There's a huge risk management where people that trade constantly, you have the risk of losing everything, right? The difference with a prop firm is you lose your evaluation fee. If $100,000 and you have that all into the market, you can technically lose that. That can go down to zero, right? So there's also it's a well thought out, wise decision to leverage both aspects. And I'm a big believer in, preservation of capital as well. I mean, it depends on all of your scenarios, the different scenarios, but there's nothing wrong with being able to trade and have access to the same level of funds or potential return with not risking nearly as much to do it. That's smart.
Yeah. And someone said it in the comment below. It's just, using a different method to accumulate wealth is why when people, even when they have cash to buy homes, they still opt for things like mortgages so that they can keep the cash to themselves. And it makes sense. So.
Right. Yeah. So yeah, exactly. My preferred decision was to keep all the capital in Maven, right? And then start using other people's prop firms and start milking them for money. Right. And that's what I did, and successfully a few weeks back, guys, we posted on Twitter. We're very transparent with all of our actions there. You can follow us on Twitter, Maven.trading or Maven prop. What is it? Maven prop trading? Emma, you tell me.
It's Maven trading.
It's Maven trading. All of the different socials are different.
Yeah, they're we tried to get the same handles for everything, but certain things are slightly different. Most of them are either Maven trading or Maven.trading now. So,
all right, guys. So that then begs the next question: is which one is more secure, right? Because a lot of people in this industry now, they are questioning, because a lot of these firms are, they're going belly up because, exactly what I said, the crypto space, where they get into this thing and they don't know how to manage their funds, and then they have to close down, and boom, now you're not getting paid. Okay. Now the broker space, you might think, okay, I got to go back to the broker space. It's more secure. It's safer. Well, the reality is there's been a lot of, brokers that kind of do the same sort of thing. There are different versions of brokers. There's unregulated and regulated brokers, and some brokers that I've heard horror stories from. So you do need to be, if I'm advising for using a brokerage, obviously you do your due diligence and make sure you get a right one, right? But there are brokers that don't pay out as well, right? Because the issue here is there's much fewer payouts, right? So it's very rare to hear a broker not paying out, right? Because withdrawing from a broker is a very, very rare case, because you have to be profitable on your funds for a very long term, right? Whereas a lot of situations in the prop firm space, you can get fast payouts, right? And really, really leverage that, because if you think about it naturally, you put in $10,000, are you really going to be withdrawing, $1,000 after a month, right? Now you're probably going to leave most of that in there, right? And continue to snowball it. But with a prop firm, you get your 10% profit and then you withdraw immediately, and immediately, okay, who is actually, telling the truth, who's actually able to pay out, right? I prefer prop firm because it makes me a better trader, risking less than a broker. That brings me into my next segue here. Perfect. Good timing, Emma. Okay, so who should be using a prop firm and who should be using a broker? Okay, so prop firm, obviously faster to buy, and it's really designed for newer traders, right? This is my perspective. Designed for newer traders who want to learn how to leverage somebody else's capital to learn faster, right? So rather than putting your funds in and blowing your account, well, if you make a big mistake, it's not a big deal, right? It costs you the $19 or whatever it is instead of the entire account size, right? It also pushes you to focus on daily drawdowns, total drawdowns, right? Focuses you not to gamble. We don't allow things like martingale, right? Because a very good reason, because once you get on your own and you're trading on your own, right, then you use martingale, you're going to have a really bad day one day, right? And you're going to blow that entire thing. Now, Ryan, how often do you see people using martingale here and various gambling strategies that, we're trying to teach you not to? How common is that people are kind of doing really risky methods?
Hold on one sec here. Sorry, Elon Musk just sent me an email, so I was just reading that. Okay. No, I'm just kidding. I was reading a comment. I'm sorry. Yeah,
that's a really good way to say I wasn't paying attention.
Yeah, I'm kidding. I was actually reading someone's comment that just made a comment. That's the first thing that came to my mind. Sorry. Throw a little humor on it. I see it a lot, and martingale is it's historically not a great strategy, to be quite honest with you. I mean, it works both ways, but I see that a lot. There's people that use violating, strategy and things and we have those things in place for reasons. And, you can definitely go to a broker and do different things. They're different business models to be quite frank. I mean, the two business models are separate. But I think that using strategies that that don't necessarily make sense a lot of times is done often. And like I've said before on these spaces, I mean, the best thing to do when it comes to trading and things is to find your niche, to find what pair or what instrument that you like to trade and that you are comfortable with the charts. Like Hunter's really great with Bitcoin charts. I mean, you just listen to him because he's always right. Like he's been right, like, I don't know, 80% plus of the time. Like, so you find that and you develop it and you don't veer from it. You keep it. Those are the people who end up successful. And it's boring because it just becomes a repetitious thing. It's you do the same thing with the same instrument every day, but then people get to a point where they realize you don't have to make a trade every day. You're only making a trade if you're comfortable and you have conviction behind that trade. If you're making a trade and you have hesitation and things, that's definitely not a good strategy that I would recommend. So I think that there's all kinds of different things that you can do, trade strategies, but it's definitely something that takes a lot of practice and a lot of consistency and a lot of discipline and repetition. So
Prop firm is safer for the trader, helps us diversify, and reduces the emotional investment for the traders. Very true, June. Right. So we've talked a lot about how prop firms are better, right? And obviously we're a prop firm, so we do have a little bit of bias, but because we are, very truthful and honest and transparent here, right? We got to talk about what's the benefit of the brokerage side, right? Who would be using a brokerage, right? So first of all, let's recap. Who would use a prop firm is somebody who, just has a credit card, not much money, and they want something fast, right? They want to apply fast. They want to learn the markets, right? And apply risk management without having to focus it on themselves, because the prop firm kind of enforces that for them, kind of daddy Maven here taking care of you, right? And then the third person might be somebody who wants to diversify their investments, right? Instead of keeping all their capital in a prop firm. Now, Ryan, who the hell is going to use a broker then if all these things are great, for the prop firm side?
I think diversification, not with just investment instruments, but across different structures or platforms of ways to invest. And prior to, prop firms were not really considered that. They were considered what you first said. You have a limited amount of funds. It gives you access to a potential lot larger amount of return in terms of not just percentage because of the leverage, but in dollar amounts, right? There's no other place. I mean, we just had a trader that had what, guys? It was like a $39 account, and I think the payout was like $7,000 or $8,000. That's crazy return. You can't do that. There's no way you're flipping, $38 into the $8,000 in any other environment. But I think that it's smart to layer your money elsewhere. And I think going forward, the demographic of prop firm is evolving, and it continues to evolve, meaning it's now going to start to appeal to people who aren't in that situation, who don't have limited funds. They might have a lot of funds, but it's going to start to appeal to that. Just like on the flip side, when someone goes to a prop and they make their capital and they're saving and accumulating, all of a sudden a brokerage is going to start to appeal to them as well to diversify their funds. It works both ways. But I'm a big believer in spreading money. Of course, we're in the prop industry. I'd like to say, hey, only do prop firms. And by the way, only use Maven. Don't use anyone else. But, we're also intelligent people. We're not stupid. And it's smart to spread your money around. I think the important thing with a broker, or, because a brokerage is still a business, or a prop firm, is to make sure, and we've talked about this before, that you are with a healthy company that is well ran. That is a very important thing, because When you have a healthy company that's well ran, denials, payout delays, not getting paid out at all, that doesn't enter your realm of worry anymore. And that's a good feeling. Nobody wants to trade on things and not get paid. So I think it's all positive for the future. And I would encourage everybody as they can to have a mixture of platforms that you use and spread your assets or spread your money around to a variety of different platforms, meaning brokers, prop firms, and so on.
Awesome. Yeah. Okay, guys. So that being said, I think I'm blurring up here. But there we go. So that being said, somebody who should use a broker is somebody who's very experienced, been doing this a long time and has a lot of capital, right? And doesn't care to diversify, right? So interesting topics here today, guys. Let's open the board for some questions. Emma, have you been taking a peek at everything?
So I have been watching, but we're getting a lot of chat today, which is great and awesome.
Good, yeah. I think it's probably
guys,
because they're showing up on stream here. They can see all of themselves. It's way more
Yeah,
interesting when you see your messages on stream, hey?
Yeah, exactly. If you guys do have questions, feel free to pop them in right now. I will be scrolling through questions, trying to see if I can find some things that we haven't answered. But yeah, if you have a question, pop it in now and we'll see it because it'll be right at the bottom of the queue. So let me see. Someone was asking before about our transparency and how transparent we are overall. I think if you're kind of unfamiliar with us, that would maybe be like a solid question. But for anyone familiar with us, they're probably used to our transparency and the fact that we do kind of roundtables like this every week.
Yeah.
So.
Yeah.
We also, if you look at any of our socials, I mean, we're constantly posting payouts daily. I mean, you see some props or some firms just do that sporadically or whatnot. You'll see that daily from us. I don't think we ever miss a day that I can even think of posting payouts. And our payouts are quick and so on. So I think Maven is definitely probably, I would be highly shocked if we weren't ranked in the top 2 or 3 of firms that are most transparent to the community, to our community, to traders in general, and potential traders who are looking to maybe try us.
Yeah. There's another interesting one here, kind of more focused on trading prop versus brokerage, which is what the psychological impacts are. I'm not sure if we can speak to that directly here, but I think it kind of has to do with, trading your own money versus.
Yeah. Emma, I think you got the right idea. I've traded on both. I came in the brokerage space before prop firms were around. I've been trading for, probably like 7 years or something now. The psychological effects, there's the main issue with the prop firm side, first of all, is that you have to get past that challenge and you're less motivated to make money, but that's actually good for you if you think about it, right? Because then you're less connected to the money, right? Because when you are going through the challenge phase, right, it doesn't mean as much because it's not real money. It's kind of in your head. It's just kind of this foo-foo la-la money, right? And when it's a brokerage, you're trading real money, you're serious all the time, and it's much more stressful, okay? Because every single time you lose a penny, that's a penny gone, right? And so it's much more damaging for your psyche. Now, mind you, after blowing a prop firm account, okay, I'm taking a longer break now, right? I did blow one, right, after getting a few payouts, and now I don't want to go again, right? So it's an interesting thing because now I have to spend another couple months before I can even start making money again, and that's actually good in essence because now I'm taking a month-long break, right? Now I'm not doing anything for a month. I'm resetting my mind, and then I'm going to go back at it with a brand new attack plan, right? Rather than just keep going, keep pushing, and it's actually my experience. Brokerage trading was much more difficult for psychological purposes.
Mm-hmm.
Yeah. This is kind of a general prop firm question, which is kind of the top 5 things that a new trader should look for before choosing a prop firm. If we want to kind of quickly go through those.
Yeah, Ryan, you want to give a couple and then?
Yeah, I mean, so we just talked about one, which is probably the biggest one is transparency. Any prop firm that is solid on good footing with a good foundation is not scared to be transparent. You know, they want to be transparent. That's definitely one thing that I would definitely look for. Number two, once you develop or you find your strategy or what you are good at trading, every prop firm as of right now has slightly different rules and conditions and things, which is not bad. It just means that you have to find the right firm for your style, for what you're doing. And so a lot of times what happens is you get, you know, someone that might see this massive discount or something, right? And they go there because it's the only whatever 40% or 30, whatever the discount is, the only one that they see. But the firm has, not that it's a bad firm, but the firm has conditions or rules that do not jive with what strategy they're trying to do. So they just basically wasted money because it's not, their strategy is not going to work at that firm. So that those two things, the other one I'd throw in there, and then Hunter can take the other ones, is I would definitely scroll through and make sure that there is proof of payouts, and you can do that on you know, socials. Even like with us, you can open support tickets, whatever. I mean, I think that that's a very important thing, that you know that firm and you can trust, because you don't need that psychological aspect gnawing away your mind. Like, once I get there, am I even going to get paid? And then go ahead, Hunter. You can take the rest of it.
The way I approach everything, guys, if you know me and you've been into some of my spaces, I answer these questions as if it's just a general question. It has absolutely nothing to do with trading, because every decision, it's like there's no different. I don't know why we're making, you know, you're picking a prop firm, right? What is a prop firm? It's a business. What are you buying? It's a product. Okay. There's no different than every other thing you ever buy, right? You go to the grocery store. What brand of chips are you going to buy? Well, the one you're going to look at the cost, you're going to look at the quality, and you're going to look at the reviews. Every single thing you ever buy, right? There's nothing more that's required. Okay. Let's say you're picking up a new laptop, right? Cost, reviews, what features and quality it has, right? That's it, right? And do the exact same with prop firms. I don't know why we're making it to be something special. Emma, you got anything to add?
Yeah, actually, I would add longevity. And not just longevity in terms of how long the business has been in business, but longevity for anything. So, you know, payouts in the long term, community sentiment in the long term. A lot of people in this space have a tendency of latching on to whatever the latest sentiment is towards a firm. But rather than just looking at what is the most recent thing in the last week, look at how people have felt about the firm, say over 3 months or something like that, because you're going to get a much better idea of what the community sentiment is over a longer period. So I would just suggest longevity.
I love it. That's a really good addition, actually, because
that is.
Yeah, because it is slightly different in that aspect for the prop firms. You changed my mind, Emma. One more thing to add in there.
Okay.
Yeah.
All right. Yeah, let me pop up another one. So someone's asking about how our risk management or any sort of prop firm risk management can benefit the trader.
How does the prop firm risk management approach? So I'm thinking this means the daily drawdowns and rules and whatnot for the trader. How is that beneficial?
Yeah, daily drawdowns, rules. I mean, I think there's kind of an answer here in terms of, like, we just talked about longevity. Having like very good risk management is going to ensure that the prop firm's around for the long term and you're getting your payouts.
Well, I think he's asking how does it benefit the trader, right? Not how, like, obviously it benefits the prop firm in terms of it lowers our variance, right? But how does enforcing rules benefit the trader, right? Well, twofold. One, the prop firm will actually survive, which is a hilarious one, because people don't remember that we're a business. We're not just giving people money because they can trade, right? We have costs and calculations and all this jazz, right? So with proper rules and proper pricing and proper infrastructure all built in, okay, the business can survive, right? And now you're going to get paid out because we're surviving, okay? That's the number one thing for you. The second thing is it's going to teach you good habits, right? And that's just an obvious thing, right? There's a reason why every single rule that we have, whether it's news trading, whether it's no martingale, whether it's what's the other one we have? You can't just go balls to the wall and bet everything on one crazy trade. You have to do it in two, right? These things are very, very risky for your account if you were trading not on a prop firm. Okay, so that's the whole purpose of a prop firm, in my opinion, is to train you and then pay you for following the rules. Okay, you follow the rules, you get paid. Same sort of thing. We're going to train you so that you can be self-sufficient. That's all.
I'm just showing this one because I think it's kind of funny. Emmanuel is one of our awesome support staff, who is often referred to as Emma occasionally by certain members in our Discord. But we are two different people. Emmanuel does an awesome job on support. I'm sure you guys see him all the time in in the chat.
Yeah, so, is Emma by day and Emmanuel by night.
Yes, we're actually the same person.
Yeah, it depends on which gender you want to be.
Yeah.
There you go.
Yeah. So someone was also asking about how we ensure trader privacy and data security. We actually had a whole space on this with John, and John talked through our data security and trader privacy. So if you really want to get into the nitty-gritty details on that, I'd advise going back and watching that space because you're going to get all the details from that one.
That was a really good space. We actually have our editor working on that one currently. So there's going to be a couple short clips coming in the way. So make sure you're following us on socials everywhere. You're going to see those. Guys, I think that's all. That's about 45 minutes. We're coming up here, guys. And I think these are extending a little bit longer each time, and I'm loving it. Getting more and more banter going on. Every Tuesday, 9:30 a.m. PST. That is 12:30 noon EST. And wherever you are, the rest of the world, you're going to have to figure that out yourself because I'm not very good at math, right? Guys, this is Emma and Ryan. And if you got any questions for next week's stream or any suggestions, make sure you leave them in the comment section below. One of the winners, so one of the comments today is going to win a $50,000 account. Emma, that's your choosing. Contact them how you like.
So when I choose someone, because last time I had to struggle to reach out to the last person, but I managed to get a hold of them. It was Jasmine. It's a little difficult to reach out to people on YouTube. So I will select someone, and I need you to go and communicate with me somehow, either ping me in a Discord ticket, or you can comment on my Twitter and I will find you. But yeah, I need you to track me down essentially, because it's really difficult to get a hold of people sometimes on YouTube unless they have a post up. If you do, I will comment on it.
How about we do this? You post the winner's name on your Twitter, and then everyone has to follow you on Twitter, and you're going to get thousands of likes. All right. So everyone go follow Emma on Twitter, Market Scope. That's her Twitter. With a couple underscores somewhere. Could maybe type it in the chat here. And
Philip,
I miss you too, man. I'm coming back.
1 sec. Let me type this in so you guys see it.
All right. So she's gonna post the winner on her Twitter. $50,000 account coming to you. All right, guys. Every single Tuesday, 9:30 a.m. Different topic every single week. Next week, probably gonna be something to help you pass prop firms. Just a little hint. Okay, guys. Thank you for watching. I'll see you guys next week.
See you guys.